welcome back to Series 6 of the Climate Pioneers Show. Throughout the course of Series 6 so far, we have been discussing the challenges of scaling deep tech solutions in climate. I've been speaking to investors, founders, venture builders, and key ecosystem players who are all focused on the same common goal. How do we scale and commercialize groundbreaking deep tech innovations? We've been exploring how to prepare for the challenges that deep tech companies uniquely face around fundraising, scaling, and team building. And we've heard stories from people who've successfully scaled to Series A and beyond. So whether you're somebody who's embarking upon the founder journey yourself and you want to hear tales from other people that have done it, perhaps you're an investor who's keen to diversify your portfolio and look at investing in more deep tech climate solutions. Or maybe you're just passionate about climate innovation and all the cool things people are working on. Whatever your background, hopefully throughout this series, there will have been something for you. But today I am joined by Katya Constant, an experienced investor, operator, and coach with a strong background in supporting deep tech climate startups with their financial and commercial strategy. This year, Katya led the launch of the Climate Brick, a first-of-a-kind playbook for scaling and funding different types of hardware-based climate solutions. So Katya, thank you so much for joining me today.
Thanks for having me. Yeah, really nice to be here.
Excellent. Are you happy to, I always kick off the same way with everybody, right? I'm a careers person, I'm a recruitment person. I love to hear people's journeys. And I think yours is particularly interesting because you started in investment banking, you moved into VC, you've been an operator within startups and now a coach. So yeah, talk us through your career journey to this point, if you're happy to.
Yeah, of course. Yeah. And I guess on one hand, I've jumped around quite a bit, but on the other, there was sort of a thread that was running underneath it all. So I'll kind of weave it all together for you. But yeah, so I guess like after I studied politics, economics at university. And so the first chunk of my career was in more mainstream finance. I think I initially went into it just because lots of smart people seemed to be going in that direction. So I thought, well, I'll try it and got a bit sucked in. And it was a good foundation, a good sort of skills that I built that I was able to use later in my career. But ultimately, I quite quickly saw that it wasn't really the best fit for me, just in terms of, on one hand, kind of the all-consuming intensity of it, but more importantly, kind of the lack of kind of longer-term purpose and meaning to my work. So I'm happy with intensity if I believe in the end goal, but when I don't, I find that combination quite grueling. And yeah, and I think since childhood, I had the desire to have an impact on the world, and that part of my career really was not aligned to that at all. But I tried within finance, started in investment banking, moved into private equity with the hope that doing kind of more buy side, working closer with companies would give me some of that kind of fulfillment and said that longer term kind of value creation alignment, but it still wasn't quite enough. So after about 6 years of that phase of my career, I went to INSEAD to do my MBA, to travel around Asia, and just to take a bit of a break and just meet some people who had followed different career trajectories to see what else is out there and how I might weave my skill set together into something new. Spent most of that year doing courses in sort of impact, sustainability, and entrepreneurship, all areas that I didn't have any prior experience in. And I was quite keen on doing something in that area afterwards, but this was 2014, 2015. So we didn't have all the big climate tech funds that we have now. There wasn't nearly as much kind of startup activity. We were sort of in between the 1.0 and 2.0 kind of booms at that point. So there weren't that many opportunities for me to pursue. The first role that I took on is actually consulting with a company called Dalberg that works primarily in the global south, sort of a lot of work in India, Africa, and some in Latin America as well, across all different impact areas. So from education, human rights, health, but also quite a bit in climate. And in effect, I think of that year as like an extension of my MBA, where I just continued learning a lot about different areas and thinking about where is the best fit for me. And by the end of that, the year that I spent there, I could see that climate was, first of all, a super interesting area and one that I was personally very connected to, but also one that was like particularly ready for kind of private sector intervention, and therefore where I could kind of use my skills the best. And then, yeah, the last 10 years, I've been working in kind of climate tech broadly. But the first 3 years I spent at Systemiq. When I first joined them, they were very early. There were about 15 people. They had just kind of spun out of McKinsey. There was an early team that came from there. And I joined to kind of set up and run the investment arm. It was not very well defined at the beginning. We just sort of knew we wanted to do something, and there was a lot of ambition, but we didn't know exactly what it was. And then we ended up raising sort of a balance sheet entity, $30 million, to make early stage investments in climate tech. That term wasn't yet fully used at that point, but That's what it was. And I got to lead that, which was super exciting. So I didn't have a prior background in VC, but kind of was thrown into it and really, really enjoyed just building out the strategy, but also actually building, a reputation for us and meeting lots of founders and figuring out how we can add value and be distinctive. So I oversaw the first 7 investments there. And the last investment I made was into ZeroAvia, which is the company I then went on to join. And I think there, I'd come to a point in my career where I was really drawn by like the operating environment. I really liked building things. I really liked creating something out of nothing. I got a chance to do that at Systemiq with the investment vehicle itself, but I realized that actually the core of the investment role wasn't as well suited to what I like doing. So I really liked that kind of building part. And I'd never actually been in a real company prior to that. So I thought it was time to go into business rather than being sort of an intermediary. And ZeroAvia was at a perfect stage for me to get involved. So that it was kind of had seed funding from the founder who had exited his previous business. There weren't really any non-engineers in the team at that point, and they were really looking to kind of operationalize the whole company, enter the UK market, and also do this prepare for Series A round. So I got involved as CFO based in the UK, and also helped to build out the UK presence for the company. And we were 9 people back then. This was July 2019, and I ended up staying there for 4.5 years through to our series kind of A, B, and C, sort of with a primary focus on fundraising, investor relations, but also, especially in the early days, I was quite heavily involved in sort of all aspects of the business, apart from engineering. That I did not get involved in. So it was quite I guess maybe lots of unconnected pieces in some ways, but there was always kind of something that I brought with me from the last thing that I did, and something that I changed as I stepped into the new role. So that was kind of my last full-time kind of employment, end of last year. And then I decided to leave after our Series C because the company was getting into kind of the next phase of its journey, sort of preparing for IPO, preparing for first aviation grade certified product. And that really changes the kind of the feel of the company, the way the way we work together, and importantly, really changes the demands of the CFO role into being much more focused on internal finance and sort of budgeting controls, things like that, which I didn't bring to the table. And I just decided after sort of 3 rounds that it was a good time to move on and find something new to do. And then this year I've been doing 2 things, so that you mentioned in the intro. So Climate Break and executive coaching. Again, on one hand, quite separate and maybe a bit sort of unconnected to what I've done before, but for me, they're very much extensions of my previous experience. Yeah. So Climate Break for me is an initiative that unites the ecosystem and makes the fundraising process more efficient. Because I've seen now from both sides how long it takes to find that match, and how at least some of the problem, not all, is down to us using different language and just not having clarity on where companies should be at particular rounds when they do not follow a traditional SaaS kind of trajectory. They don't have traditional milestones. So what do they have? And how can you tell a good company apart from a bad one? And when there's A, B, or C. I really lived that problem at ZeroAvia because we were deep tech, long time frames, all of that stuff. And so I was really passionate about figuring out how to solve that at scale. And then the coaching is something I've actually been interested in for a very long time. And I've done various trainings and courses and things like that. But also, I think in my personal experience, I realized how much of I guess my successes, but also failures, and my enjoyment of my journey was down to what was actually happening inside my head rather than what was happening around me. And I do think that, especially in the climate tech space, there's a lot of pressure. It's a fast-paced environment. We're working on something kind of really big, really important, and we're not making enough progress. And we are building businesses. We're still entrepreneurs. So I think that there's a more space needed for kind of managing ourselves in a more kind of thoughtful and deliberate way, so that we are actually able to be our best selves and bring all the energy that we want and can bring to sort of our work in the space. So so that's kind of how I think about that.
Well, thank you for sharing that, because I always think it's really interesting to hear those journeys and how they kind of intertwine, and how all these different threads come through over time. And you've had a hand in some amazing successes over the years, both from an investment perspective and an operator. You talked there about the journey with ZeroAvia and the fact that you saw that through from seed, I suppose, but as an operator from Series A to Series C, and that's that's crossing that valley of death or whatever you want to call it, that a lot of hardware-based deep tech businesses don't manage to make it across. You've also had some other successes, in seeing Upside Energy exit to Octopus, Grey Parrot, who've had, closed a Series A and had some amazing commercial wins. Are there certain common themes that you've seen in those teams and in those businesses around how they operate, their proposition, the founding team, that you think have allowed them to succeed where others have struggled? What did you see in them?
Yeah, definitely. So I think a few commonalities, and these, I wouldn't say these are kind of the only ways to succeed, but these are common threads, I think, in these companies. It's definitely a possible way to do that, but I would say not the only one. So I think the first kind of thread I thought of in the teams that actually across all those teams, they had second, if not more, second or third time founders. So experienced entrepreneurial teams. And again, I don't want to say that's the only way you can succeed, but I think it definitely does help. And that helps not only with investor perception, but I think it does actually help a lot with how you approach yourself, your team, your business, kind of capital allocation, all those things. I mean, doing the first time is the hardest. And I think second time is not necessarily a lot easier, especially if you're going into a different sector, as actually the Zeravia founder certainly did, and Grey Parrot to some extent. So there's going to be new challenges, but I think it does, it makes things go a bit smoother, a bit faster, for sure. So that's kind of one thread. Second thread actually across those, I would say that the very early team was not composed of like super deep industry experts that were, doing R&D in their fields for multiple decades. Interestingly so. I think there definitely are a lot of deep tech climate companies that have those beginnings, but these three companies didn't have that. They were more people that understood the sector, but really were more kind of generalists and good at kind of just business building, bringing things together, seeing a complex problem and coming up with a new way of thinking about it. So actually bringing a bit more of the outside in perspective and being able to just work through that in a lean and agile way, rather than saying like, we've been following this for 40 years, so we know exactly kind of how to do this. So again, you can debate whether that was, a causal relationship, but that is a commonality between these companies that I think is interesting. Yeah.
And I guess because they're bringing more kind of, because often a challenge with hardware or deep tech businesses that do maybe perhaps spin out of academia or have a really deeply specialist founding team is that there can sometimes be a tension or a challenge when it comes to then commercializing that business.
Yeah.
Commercial founders in, I suppose.
Yeah. And there's a risk of being too technology led and not product or solution led enough. And I think certainly at the Zeravia journey, I know the closest from very much inside out. We started with a problem and figured out how to solve it and then brought the tech in. Rather than saying we have a super amazing fuel cell, who wants it? Which I think is how, again, don't want to say that doesn't work, but I think in this case, we didn't follow that argument. So we thought very much about like the aviation industry has this issue. What are the different ways that we can solve it? And how do they compare and how can they scale? And then with, okay, hydrogen seems to be most promising. Where can we source fuel cells? How do we bring the system together? And then over time, we ended up in actually sourcing a lot of the tech. So the company became deeper tech over time, but we didn't start off with a deep tech piece that we kind of sought to commercialize. So I think it's, an interesting observation about that journey as compared to quite a few other companies out there that are also very successful, but I think they might run into different sets of challenges as a result. So that's one, and I think another one, again, especially the case for Zeravia to some extent, also Grey Parrot, is when you're operating in a quite slow, quite complex industry, waste management, aviation. There's the value chain is quite set in its ways. So like in aviation, you have airframers, you have engine manufacturers, you have like fuel providers, you have maintenance providers, you have airports, so like lots of stakeholders. It's cut up in a very specific way. There's not a lot of history of like business model innovation, vertical integration, that sort of stuff. Some, but not a lot. Partnerships are key, and thinking about them in a smart way right from the beginning is really important, because there's no way you can do everything by yourself. It's not possible. It's not possible to pull it off, but also get funding for it, etc. And so I think thinking about which parts of the problem are you best placed to address, and then where do you need partnerships, and how can you get them on board as early as possible, to show, again, investors, but also your customers and the rest of the market that you're kind of credible and that you understand the complexity and you're tackling it head on, I would say was really important.
Yeah. Okay, amazing. And when you were working at Systemiq, so in your role with a sort of VC hat on, I suppose. What was important to you when you were reviewing a startup for investment? What were the kind of key things you were looking at? I mean, you mentioned a couple there about, themes that ended up making those companies successful.
Yeah.
What were you specifically looking at that in your mind would make you go, yeah, this is really investable?
Well, so the Systemiq experience was an interesting one because we operated, because it was an investment vehicle that was within a larger consulting firm. So we had, I don't want to say dual mandate, but we had basically two sets of criteria, rather, I would say, to adhere to. So one is just kind of standalone, kind of more traditional criteria that you might look for in a startup, and I'll go through those in a second, how we thought about them. But we also had this concept of like, how does it actually fit into what Systemiq is doing? And is Systemiq a differentiated investor? So the whole reason we had an investment vehicle was that we believed that the work that we were doing on the advisory side and the insights we were generating, partnerships we were building, on one hand allowed us to identify interesting opportunities in a way that others might not, but on the other also allowed us to actually add value to those businesses in a differentiated way, and kind of to really work with them in a much more hands-on way and bring sort of partnerships, expertise, connections into them that definitely are different from a VC, because we had like a 300-person consulting business attached to the VC effectively that was very, very deeply plugged into climate. So quite often companies actually got stuck more on those criteria, because quite often we would find kind of a good deal, but we would really get stuck, not stuck, but sort of like really debate, I guess, the sort of why us and how we're really differentiated. Like, is this really the company that we should be backing? And I think related to this, but kind of bringing the two together, was actually this concept of like, is our investment catalytic? Because we had like mostly kind of family office investors who really, they were already invested in lots of more traditional VCs. So they didn't want us to just chase deals that everybody else was doing. They wanted us to be differentiated, catalytic, take more risk, look longer term, pick the really difficult companies. And again, actually, that experience was that doing this well is difficult, because you kind of know what really good looks like in a more traditional, simple company. But to my point earlier, when you don't have a set of metrics outside of revenue and profit to look for in these businesses, how do you know that it's catalytic versus you're just picking a company that nobody else wants to back? So that was like, do we really know something everybody else doesn't, or are we just kind of picking a bad deal? And so we again spent quite a lot of time defining that, because I guess on the more traditional venture kind of criteria, we would look at team quality. Not necessarily, didn't have to be sort of second or third time founder, but we did look to their experience kind of in their industry, but also in building business. We looked, of course, at the market opportunity, the technology, kind of where they were in the product market fit, sort of commercial traction, and just the level of disruption they were bringing into their space. Like, for us, it was important that this wasn't like a kind of round the edges incremental enabler type of thing, but this was something that was kind of really part of the transition in a big way. So
and that was how you would determine whether it was catalytic or just a bad deal.
Well, catalytic kind of tried to bring the two together.
Right.
So is it disruptive and in its kind of own field, but then are we also well placed to understand the risks that this company has in front of it? Like, can we actually tell? We couldn't always perfectly, but we tried, whether it is catalytic. Like, is it trying to do something really different? And and how can our knowledge, our expertise, our networks help this business actually succeed? So how can our capital kind of really help it, rather than, maybe expose it even further? Because if we invest in this round, but like nobody else wants to do the next round, that's not really doing the business service. So that was always the hardest part of the conversation, I would say.
Yeah, absolutely. Yeah. And as an operator, when you were at Zero Avia, you were an operator from in a CFO role, right?
Yeah.
And helping with that financial strategy, that commercial strategy, is what you've done on an advisory kind of board observer basis, I imagine, for lots of companies throughout your investment career. What do you see as being the kind of key financial challenges that deep tech businesses struggle with? There must be common themes from a finance perspective that you're seeing them struggle with, perhaps that are different to what a software business is facing. And at that kind of pre-seed to Series A early stage, what are the sort of core themes that you're seeing with where they're struggling with their financial strategy?
Well, it's quite a long list. I think so. One is that most of them, like, they have varying degrees of capital intensity, but they are capital intensive, so that's just one. Like, they just need more money, and they need a lot of money relatively early on, when not everything is fully proven. So when I like to think about this as different risks, so kind of technology, market, scale up risk, scale up execution risk, right? And I think a lot of deep tech is exposed to all of them for quite a long time, and like a while needing to raise tens, if not hundreds of millions. Like in the case of ZeroAvia, by the time we raised our Series C, we still had technology risk exposure, but we were raising 150 million. So kind of that's a pretty difficult thing to sell. So it's kind of the capital requirements, but also like versus the risk profile. I think that's really the challenge. It's not just that it needs money, and people raise a lot of money for different things, right? But it's like, what returns are you offering on what basis, and what are you asking people to underwrite? I think that's really the challenge. So that's one. I think second is just like uncertainty, both at the top line level. So a lot of these industries are exposed to kind of policy, regulatory environments, and of course you can build your forecast assuming that none of it's going to happen and being fully independent, but there are additional macro factors that are much harder to predict in climate tech businesses than maybe in a more traditional SaaS business, that could be really, really kind of big swing factors in the positive direction, but could also kind of really harm a business. So I think that kind of that side of it. And then the other sort of driver of uncertainty is just uncertain timescales. And in particular, ZeroAvia was in one of the hardest parts of this because our own product development timeline was super long, but we also had to get the product then certified by the regulatory authorities. And that's a process that is not controlled by us, very uncertain. You don't have sort of exact guaranteed timelines. You can be forced to repeat certain steps, etc. So it's more like a pharma sort of type of biotech pharma type of sort of product introduction structure, where there's like a regulatory process you have to go through once you have actually done the job of developing the product and it works. And that sort of exposure, and I think when you start off, you just don't know kind of the extent of that volatility. So you don't know, is it plus or minus a year? Is it plus or minus 5 years? And kind of that starts to narrow as you progress, but it's not, kind of reducing that volatility is quite a difficult job, which makes forecasting difficult, makes capital planning difficult, makes sort of reporting and selling to investors quite difficult because they like certainty as much as possible. So yeah.
And I suppose where you're physically building a product as well, and you're needing raw materials or components, and you're needing to bring those in, there's all sorts of risk and an issue and cost that comes in around that you don't have in a traditional SaaS business, right?
Yeah, and actually to that point, there's also the whole the exposure to your value chain, your supply chain, which you don't control. So even if you kind of your end product, you've developed it, you have customers, you've certified, if you've certified all that, you're dependent on sourcing the materials, the inputs, whatever the case might be. And quite often that value chain is also going through a disruption. If it's battery, whatever the case may be. And so there's actually uncertainty in the chain as well that you are not in direct control of. And of course you can mitigate it to some extent by having a more fragmented sort of supplier base and maybe in-housing some of it. So there's strategies you can deploy, but it is tough because you don't have as much control over it.
And what would you advise to founders in that early stage who perhaps don't have somebody that's incredibly, deeply financially literate would be the wrong phrase, but, that don't have a financially focused member of their founding team that's struggling with some of these challenges? And if they're wanting to, they're in the process of raising money, how can they start to, I suppose, de-risk some of that for investors, or start to show at least that they've thought through some of these challenges that they might face and have contingency plans for those? What, as an investor, let's say, would you expect to see?
Well, and this is partially what we've tried to do with the climate brick, actually, is to support. So it's a framework that shows kind of what success has looked like for climate tech businesses so far. So we've split the climate tech universe into 7 bricks, which are types of company. And the idea here is that it's not all just kind of software or not software. There are many kind of shades of gray, right? And so the companies differ in terms of their like tech intensity, tech maturity, and therefore capital intensity. So we've split it into 7 bricks. So for example, one is moonshots. So these are like a kind of nuclear or quantum computing that's kind of quite binary, really far out there. It doesn't work even in the lab scale at all today, super capital intensive, but could really, really transform an industry. And then we also have things like gigascaling, which are technologies that already work and are commercial, but just it's about kind of scaling them up. And so there's a few, kind of grades in between those, but these are just some examples. And so what we've tried to do is kind of give a manual, a blueprint that investors can use maybe when assessing companies, when managing companies in their portfolio, when formulating their portfolio strategy, and then founders can use as a guide, especially if they don't have, a lot of that experience in the team, for like what's ahead of me, and if, what might I need to do in my Series B or C, who am I going to have to bring into the capital stack, and what can I start doing actually about that now? What relationships do I need to start forming? Because a lot of these, a lot of these kind of financial vehicles don't actually fully exist yet. So a lot of you have to do a lot of market education, relationship building, and kind of put them in place around you almost. So yes, we've tried to kind of bring that framing in. So I think if you don't have somebody who's lived this before, use the climate break framework and sort of, but learn and see kind of what might you be expected to have at each stage. Which dimensions are you furthest away on, and how can you kind of bridge that gap, and how can you lay really strong foundations that will help you longer term?
And when do you think it's wise, and I suppose this is a little bit of a how long's a piece of string question, but when do you think a startup should start to think about having a CFO in place, either on a fractional or sort of full-time basis?
I guess I'm somewhat biased because I was one, and I therefore think I was very useful. But but I do think, if you're a hardware-based business, capital raising is going to be a big part of your headache, right? It's not going to be easy, and depending on where exactly interest rates are and things like that, it might be slightly easier or slightly harder, but it's going to be a big challenge, right? Raising, but then also kind of figuring out how to price your product, how to fund it, like longer term. It's like money, the finances of all of this are going to be. It's not just about reporting your accounts at the end of the year. You have to really think about your kind of financial strategy. And so I think it's whether it's CFO or whether it's somebody slightly less experienced, fractional, etc. I think if you don't have that in the team, I think you need somebody like that around Series A. Because at Series A already it's going to be difficult. Series B, for sure, you're going to struggle with this. And I just think like it's something that the smarter you are about this earlier, the easier your life will be longer term. And you can either try to work with kind of advisors and outsource this to some extent, but in my experience, that's much harder to get right. I think it's better.
You mentioned there around how do you price your product? That is such a key part, especially in those companies that you said earlier on are slightly more technology focused. They're focused on the tech itself. The part about how do we make this cost effective, or how do we make this cost comparable to whatever we're trying to disrupt, is the bit, right? Because without being able to crack that, you have a really interesting research project, but you're not going to be able to commercialize and scale it, right? So
and it's like, how do you raise money? How do you get from A to B to C? But like, how do you actually become profitable as a business? Like, how do you become a real company? That's like the real question. And so when do you get unit economics right? How do you continue funding your production, et cetera? Like all these kind of much bigger kind of capital markets questions, I think are much more relevant for climate tech businesses earlier on. And I think companies that have thought about it earlier on have been, I think, more differentiated. And I think investors can see that, in the way they've thought about their fundraising, their materials, their forecasts, all these things. And, some investors will also bring that experience with them, and they'll help companies with this. But I think ultimately, when they're putting money in an early stage, their key question is like, who's coming next after me, and what are they going to be underwriting? And how do I know that round's going to happen? Because if that one doesn't, then I don't make any money either. And I probably don't have enough to keep funding it, for the subsequent rounds. So it's kind of everyone's aligned and wanting to make sure that journey is smooth. So
absolutely. So tell us more about the climate break. You mentioned there that you told us a little bit about it. It's a playbook for these 7 different types of hardware-based business, and it's for founders and funders, I suppose, to use as a manual to help them understand how to manage, how to scale these businesses, and the different investment vehicles needed to help them succeed. Where did the idea come from? How did you come to be involved in it? And why was it so important? What was the gap that you were addressing?
Yeah, very happy to talk through it. So it was incubated by EQT and EQT Ventures and Contrarian Ventures. So two of the leading kind of early stage VCs in Europe. And I guess it came to a realization that, the space is still not standardized, and we don't have in SaaS, we know what we're looking for. In our space, we really don't. And it's really case by case. We spend a lot of time on kind of education from both sides, and investors waste a lot of time, companies waste a lot of time. So wouldn't it be great if we just had like I don't know if you're familiar with the SaaS napkin, but it's sort of a very simple framework. It's a napkin that has a table which says, for series seed A, B, C, here's what you need in your team, in your ARR. So some of the key things people are going to look for. In climate tech, that didn't exist. So that was the very simple initial idea. Let's make this for climate tech. quite quickly realized that there isn't a single type of climate tech business, and that generally it wasn't going to be so easy to come up with all these metrics. And so McKinsey was involved in the project about a year ago, and they ran one of the largest, I think, if not the largest, climate tech studies around this, where they crunched through data of about 3,000 companies, initially in Europe, because EQT and Contrarian had a really good data set in Europe, and did lots of interviews with stakeholders as well to come up with kind of the first product that we released in April. So yes, as I said, we ended up with 7, so not one type of climate tech business, but 7. And for each of those, we have that kind of SAS napkin style output of like, this is what success looks like for companies that have actually gone through this journey, but also qualitatively informed by interviews from investors, et cetera, that have actually validated the, the more bottom-up, data-driven sort of data points. So yeah, but it's, it's very much an evolving, living product. So it's something we want to continue kind of adding to and evolving and making more fit for purpose over time. So we're in the process of scoping out the next release for 2025 now, when we're going to expand it to the US, and we're going to add a number of other kind of dimensions and things like that into it. But so it's gonna keep changing, but already we've had really, really positive reception from all the stakeholders. And I would say the primary users are investors and founders, but we are also trying to use it as an opportunity to highlight that in climate tech, the relationship is not just between kind of company and investor, but we actually need corporates, policymakers, a much more complex set of investors. It's not just your early stage VC. You're probably already going to be talking to debt providers, later stage equity providers, and possibly other sources of capital. So we're also trying to bring them around the same table, because I think another recognition is that we don't have a framework, we don't have standard metrics, but we actually also don't talk to each other enough across the capital stack and across some of the different groups of stakeholders. So we're also trying to kind of create that dialogue. So initially we can create this kind of this glue, this common set of like terms and reference points, but over time use that as an opportunity to kind of really understand where the gaps are, and then actually craft solutions that are more nuanced, that address very specific gaps in some of these company types, rather than just kind of more broad brush stroke, like venture debt, for example. I mean, we need venture debt, but I think it's important to understand where exactly it fits in, what kinds of companies need it, and kind of how should they position themselves, versus there might be other companies that their challenge is something very different. And then we need different instruments to support them. So,
and from a founder perspective, can they use it even as simply as understanding what milestones are expected from them at each stage and what they need to be?
That's kind of the simplest use case. So you can kind of go to the website. It's we have them kind of brought to life on each brick page, but you can also download the whole manual. You can see which of the bricks is the closest fit for your business type. In a lot of cases, it might be 2 that sort of are both relevant, but it's probably easiest to pick one kind of that's most relevant. And then you can then look at the manual for that brick, and see sort of, where you are, what's ahead, and kind of how you can start planning around that. And in addition to the kind of brick level sort of framework, we also brought in some pioneer sort of case studies. So these are case studies of individual businesses that represent each brick particularly well, where we've actually gone into one company's example and gone a lot deeper on specifically what do they have in terms of, I don't know, contracts, people, product, etc., which I think really helps to bring it to life, because some of the like more abstracted level things might seem a bit abstract, whereas I think looking at it at the company level, I think really makes it much more actionable for people, much more practical.
And from your perspective, I mean, this being a space and an industry that you've been involved in for a long time, what were the key learnings for you that came from this research and from putting this together? And what were the kind of key themes and takeaways that you took from it? Anything that surprised you even from pulling this information together?
I think my main learnings were actually more the sort of kind of community sort of stakeholder reception level. I mean, of course, there were some specifically interesting findings that came out there, things I didn't know, the things that maybe were surprising to some extent. But I think for me, it was really interesting to see the extent that people actually are craving collaboration, and that they want to, work more together and sort of really move things forward. And maybe there's some, there's great events, there's all sorts of like alliances and communities and things like that, but it seems to me that there's still an opportunity to do more, especially across different buckets of investors. I think within early stage venture, there's a fair amount of collaboration, but across early and later stage or early and kind of infrastructure, private equity, there's not enough dialogue happening. And I think this helped people to kind of bring it together. And I think it was something that on one hand is like quite simple, what we did on the output side, but I think a lot of people found just kind of really, really useful and a really helpful way to look at it. I think for me personally, I really particularly liked the way of segmenting it into this company archetypes rather than sectors, for example, or rather than saying, hardware, software, because I think this captures the fundraising journey, the uniqueness of it much better. Because I think we're saying, yes, sectors, of course, there's like a thematic significance, but actually to understand the fundraising needs, it's much more relevant to look at the business model to look at those kinds of things to see like when and how is this going to need money. And kind of when is the product actually going to come to market, and use that sort of commonality across companies.
Yeah, and you mentioned that the reception of it from a collaboration perspective and the amount of collaboration, the appetite for collaboration amongst the investment community was one of the things that you took from it. Are you finding that appetite is equal across the climate stack, or are you? So I suppose my question is: are you finding that corporates are as keen to collaborate as the rest of the investment community would like them to be?
I think they are. I think they are, but it's like different. I think they just are still struggling a little bit to figure out exactly how, because I think a lot of them now have venture arms, but they have different degrees of alignment with the rest of the company, and quite often the venture team operates on very different timescales, and they're actually quite disconnected from like the sourcing teams, like from the actual business units, and those units still have like a financial year time horizon. So I think that for a large company to be able to innovate, I think that machine is still not functioning very well, because you might have like the sustainability person, you'll have like the innovation sort of venture team, and then you'll have the actual businesses, and they're not synced up enough, and they have different incentives and different kind of resources at their disposal, so that I think they're still not able to support companies through that journey as well as they could be. And so we're hoping that also looking at this framework might help them to better understand when they can be more useful as either customers, suppliers, partners, or as investors, or as just some other form of support, or even kind of push their own sectors forward and with their own businesses. Yeah.
Are there certain industries, are there certain geographies where this is happening better, where communication across the capital stack is better, education across the capital stack is more like coherent, where where corporates are playing a more involved role, let's say, that climate could learn from? Or is it a problem in all industries?
No, I don't. I mean, I might not know of examples, but I haven't seen really that comparison. I mean, I think US is at the moment like very vocal on kind of climate capital stack, all of that. There's just more data points in the US because I think there are more companies. It is just a larger kind of single market. So there's maybe a few more examples of that, but I would say that the challenge is the same. Across all of that, because I mean, a lot of the problems we're talking about are global, and these companies, I mean, they might be headquartered in a particular location, but they're really global in terms of how they operate. So I don't, and I can't quite think of whether there's one type of industry that is better at this. I think they're all quite dysfunctional.
Yeah. Fair enough. Well, hopefully climate can be the first to really know. So as you mentioned, and we mentioned at the beginning, you've embarked upon a new phase of your career, right? So you've started coaching, in part, as you said, to help founders, support founders through that sort of emotional side and the personal challenges that come with being a startup founder. What led to this change for you? Why at that point did you think this was the challenge that you wanted to embark upon next? And what are the sort of key things that you have learned about throughout your career, both as an operator, as an advisor, and as an investor, that you think, allow you to really add some value here?
I mean, in terms of why I've chosen this, I think it was just from many different sources, the recognition that at the end of the day, like, we are all individual human beings that have the same fears, insecurities, anxieties, issues, relationships in our lives, etc. That like those things really taint a vast majority of our experience and of how we show up to work and how we show anywhere, including to work. So I think I never believed that we can like separate, you know, our work self, personal self, that we can be different people and that one doesn't affect the other. And I think, you know, I think when I also like through Zero Hour experience, I really felt that like the best moments were the best because of the human element. There were times when we came together as a team, when we felt really kind of valued, empowered, synced up, you know, when the communication was good, we were all aligned. Like it was the human dimension. I mean, yes, okay, we raised a lot of money and we posted about it on LinkedIn, but like for me, that was not what made me happy. It was just kind of feeling that I'm playing a really important role in this team of individuals, that I'm aligned, you know, in terms of mission and kind of that human factor. And equally, the times that, you know, that I felt the worst were there were not the times when kind of bad things happened in the business necessarily. There were times when I was feeling, I don't know, insecure about the evolution of my role, or feeling like I don't know what I'm doing, or that I can't manage my team, or that I don't understand, you know, why the company is going in a particular direction. I'm not fully synced up with the rest of the exec team. It was really more questions like that. Or when I was struggling, you know, work-life balance, all those things that we now do talk about more, but I think we're still kind of figuring out kind of what that really looks like. So I think it was just, yeah, like the human experience side of business, I think has just become like clearer and clearer to me, especially I think in the kind of climate tech ecosystem, because like all of us chose to work in this industry. So it's personal for all of us. Like, you know, you have to have some personal connection to this, I think, to work in this. And, you know, the entrepreneurial journey is very personal. Like to go through building a business, it's a pretty weird thing to decide to do, to go through something kind of super risky, super difficult, like, you know, super uncertain and very, very difficult. You know, so I think there's something driving you. There's some really, really strong, powerful force in there, which is mostly positive, but typically comes with some, I don't want to say negatives, but, you know, some kind of there's issues, downsides, what complexities that are important to manage. So I think it's all those things. And I think, yeah, just generally, I've always been interested in psychology, psychotherapy. It's sort of the area that I've always like read about in my spare time. And I've done a few sort of like courses and trainings. And before I even thought about bringing this into my career, it was just something I've always been really interested in. Like, why are we the way we are? What are we here to do? Sort of like, how do we lead our lives? What are the different paths and all this kind of stuff? And I think it was really exciting to figure out a way to bring all that together this year.
Absolutely. And are you focused more so on working with individuals and helping them deal with their own issues and problems and the complexities and motivations? Or do you get involved? I mean, are you working with an individual or with a company and looking at how the founding team are communicating and collaborating? Or do you do both?
At the moment, it's primarily individual. But I'd really like to get into more team dynamics. I mean, it's a different skill set, or it's a slightly different skill set. And I think I would like to get a bit more training in that area, because that's sort of like organizational dynamics. It's something that I definitely have a hunch for and I find super interesting, but it's not something that I've done in this capacity yet. So at the moment, it's mostly focused on the individual. But I mean, to help the individual, I have to understand their context. Yes. But my client is a person. Right. So I work really with them, and yes, you know, their relationships with other people, the broader business objectives, things like that, of course, come into it. But my focus is the person in that situation. But I'm really interested in kind of the founding / leadership teams. And I think it's such a crucial part of the journey. And when you go from one to multiple to sort of more, how to sort of navigate that.
Absolutely, yeah. And what are the sort of common couple of challenges that you see people have? And I appreciate everybody's context, everybody's situation is going to be nuanced and is going to be difficult, but I can imagine there are threads of similar sorts of challenges or struggles that early stage founders tend to have, especially as their business starts to scale and grow. What tend to be the themes in those?
I think one that's like, it's probably particularly heartfelt for first-time founders. I think people who've been through it before sort of know it's coming, but probably still find it difficult. Is just like, I think that switch from, I think with the very early stage, maybe like C or 0 to kind of A plus minus, your role is much more about knowing the answers, doing the things. It's really more about you, whether sole founder or founding team, but it's sort of it's your actions, your decisions, your knowledge that's being assessed more directly at that point, versus as soon as you start hiring a bigger team, your role really changes and becomes much more of, how do I bring the right people in? How do I keep them in? How do I get the best out of them? So your role becomes more of an HR role. And a lot of founders aren't great at that and don't want to do it. And again, this is my view. Some people might disagree with me, but I think the sooner you come to the realization and then ask yourself, like, do I do this well? If
Right.
so, great, I'm going to really step into that. If I don't do it well, can I learn to do it? Can I learn to do it better? If I will never be good at it, don't like it, hate it, etc., is there somebody in my team already that I can trust to do it? And I think a lot of the time people leave this until too late, and just kind of like, oh yeah, if you just chuck some smart people in a room, everything will be fine. Or I think for too long think like, it's still about me. I have to know the answers, and all these other people are just here to kind of help me execute on my vision. I think that's not the right way to think about it. And I think that transition from it's all about me to it's all about my team, I think is a really challenging place for founders, especially because I think a lot of their identity becomes very closely linked to the business, and I think it's really hard for them to step out of the limelight in some cases, and to trust people enough to actually carry forward their vision for something they're so passionate about, so excited about. And I think on one hand, no, they can't do it alone, but on the other, struggle to let go of certain areas and accept that their role is going to just be very different, that it still is about them, but they're in a bit more of an enabling behind the scenes sort of role. That's one. And I think another that's kind of linked to that is our relationship with control in general. Because I think there's this kind of like unsaid agreement that we have to kind of like micromanage and check everything, and that good founders like I know all the detail, know every single number inside out, know every single spreadsheet, all this sort of stuff. And I think you should be obsessed about your industry, your business, your team, all of that. You should have the passion to learn and to know everything. But at the same time, if you don't trust your team and you have to check their work, that's not scalable. That's not going to go far. And I think it's kind of, do you have that trust in your team? But ultimately, I think this goes deeper. Like, do you have trust in just like the universe, the world, yourself, to let go of control in certain areas? And yes, that doesn't mean you kind of relax and just let things unfold by themselves. No, but it just means that you recognize that you can't control everything, and you control the things that you can and that are worth you exerting the effort, and then you sort of let the others unfold. And I think that really what resilience is. But I think that most of the time we think resilience is just kind of having a stiff upper lip and just carrying on when bad things happen, which I don't think is what it is.
And what advice would you give to early stage founders at that sort of let's say they're still in the very early stages, right? What advice would you give them around practices to start adopting, things to start thinking about, ruminating on now that would embed really healthy ways of working, or set them up to face those challenges as they come?
Well, I think one is just kind of I think it's really important to have like a self-management practice. So in the way that, a lot of us in the business world are really good at like managing projects, or we think we're very good at managing other people, but we kind of fail to apply the same to ourselves. Like we don't really think about our kind of working time, our life in the same structured kind of goal-oriented way. So I think for us is just adopting some sort of practice like that of like, how do I manage my energy, my life, from diet, exercise, sleep, but also just like my day, my effectiveness, like what am I really good at? Where do I add the most value? Am I spending the right amount of time in the right areas? Like these sorts of things, and having some practice around that, having some practice around managing your time. And I think that there's kind of a broader just like self-awareness piece. And I think you can do quite a bit of this work by yourself, but I do think it's easier to do it in some sort of, coaching type of, it could be peer, but some sort of what somebody else is involved, because they will just help you to hold up the mirror a bit and make sure that you're being honest with yourself. Like, I think it's like just continuously asking yourself the question of like, why am I doing this? What do I want? What might be getting in the way? Where do I need to improve? And some of these quite basic questions, but just making sure that you're aligned on that. And like, what do I really love about this? Like, what's really distinctive about what I bring here? Like, am I doing what I'm meant to be doing on this planet? and kind of how can I strip out the other bits, or do them differently so they do align with kind of my zone of genius and sort of who I really am. So I think it's having a deliberate practice around that is really, really important. And I think the other is like having structures for just very clear communication with your team, whether they're 2 people or 100 people. I think just recognizing the human kind of dimension to people. I think people need to feel bought in to the mission, because they're going to be working super hard. And I think if they don't fully understand why what you're doing, why you're doing it, why certain things are happening, it's much harder for them to stay motivated. So I think from the very early day, it doesn't mean you have to be like fully democratic and tell everybody about everything all the time. No, but I think it's kind of the right level of transparency communication so that people have enough to understand their piece and what's going on and feel connected to that, I think is really important. And I know this is, probably possibly cliche, but I do think like creating space for sort of psychological safety, vulnerability is really important. And I think you can lead by example there and create a really, really safe, trustworthy environment that I think it will allow people to be much better versions of themselves if you do. So I think just, bringing that kind of, I think a lot of us think vulnerability is a weakness, but I think it's actually a sign of confidence. If you're able to say, I don't know something, I think it's much more of a sign of confidence than not. But I think that's not how a lot of the times we look at things. And I think if you could create some of that in your team, I think it would go a long way. So
yeah. That's amazing. I need to talk to you about coaching and teams and all day long. But Katya, thank you so much for joining me today. And thank you so much for sharing all of that insight. If people want to get in touch with you or people want to find out more, where, first of all, can they find the Climate Brick? Second of all, as you're iterating the Climate Brick, are there certain types of people that you'd like to hear from that you could draw insights from? And finally, if people want to talk to you about coaching, how can they do that?
Absolutely. So I do have like a bit of a split identity thing. So I have different answers to that question. But so on Climate Break, we have a website. So that's the best kind of resource. It's www.climatebreak.com. So you can download the full manual there. It's kind of buttons right at the top. And you can also go into each of the bricks separately. There's kind of an interactive section of the website where you can see the brick, the pioneer cases, and just a little bit more information about how we came up with that. And there's actually a button on the webpage to send us feedback. So if you click, I think in the menu, it's one of the third options or something. So you can, if you have any high-level reflections, we really, really welcome those. We are collecting feedback. So in terms of who we want it from, I mean, I think our primary users first and foremost, so founders and investors. We want feedback on the level of like just, I mean, if you don't like our website, please let us know, because we want this to be a useful, interactive, easy to find, easy to use tool. So if it's not, we want to know that. But also from anywhere from there down to kind of this data point doesn't seem quite right. We raise it a different valuation. So like maybe you should consider our data. So anywhere in between. If there's like a dimension you'd like to see, if you think we should have not 7 but more bricks and there's something we haven't captured well, if there's something you'd like us to go deeper on and kind of just create more specialized resources for, we're also really keen to hear that. So we're trying to build up a bit of a resource library for founders with pulling together a lot of the amazing stuff that's already out there. So that there's offtake libraries and great things already on folk and kind of venture debt, things like that. We really just want to pull all that together, but also over time create some of our own proprietary insights. So yeah, definitely get engaged there. And you can also sign up to our newsletter or follow us on social media. We have like webinars and other kind of ways of engaging with the community. And yeah, so that's on Climate Break. And then finally on my coaching, I have a website, which is katyaconstant.com, and my email is katya@katyaconstant.com. So you can find me that way, but also I'm on LinkedIn in both capacities. So you can always message me. I'm quite responsive typically and love to hear from you in either or both capacities if you want to learn more.
Fantastic. That's lovely. Well, Katya, thank you so much for joining me today. Thank you, everybody that spent your lunchtime listening to us, or if you're catching up on podcast format, thank you as well.